Hi there, traders. Now, just a quick update on the Fed. Now, the Fed have done a really good job. Jerome Powell really dodged a bullet here with regards a huge amount of pressure on them giving specific projections for inflation and growth and what they're going to do with rates. So basically, they've kept their policy pretty much intact, and they've sort of signaled that rates will probably be half a percentage point lower by the end of this year. So I think the first rate cut looks like the market's factoring that in around June. So what that does for us is a lot of different things. It actually takes the pressure off the market, right? Now we've got Trump doing his part here and there. Dollar index, you can just see the price action around this. It was a little bit disjointed. I would expect the price action now to calm down and we go back to the fundamentals, right? The Fed have signaled what they're looking for. Now we have the projected plan from the Fed. So now all we need to do is watch the major US fundamentals and we can start to see whether that rate cut that's factored in for, say, June comes in earlier or later, right? And that's going to give us pretty much normalized markets from here, right? Of course, Trump could come out with some extra bits and pieces, but we've got the answers. It's pretty neutral. The path is the same. They expect inflation to be a little bit higher, growth to be a fair bit lower, unemployment to be a little bit higher. So overall, we've got a nice map to work with, and for me, that's like a go for a weaker dollar still, right? Ideally, we'd love to see some fundamentals come out now, but Powell's out of the way. I mean, all we've been doing here, like on the dollar index, if I just get this chart up, these orange trend lines, right, signals that they aren't exactly like, you would put your life on it. But these are the trend lines all we've got, and this is quite significant because all we've had is basic sideways moving markets, right? The dollar index against the basket, not really doing too much at all. We've had a bit of a calamity there with in Europe, obviously the Turkish lira situation, and then you've got the Fed on top of this. It's a little bit uncertain, right? I think that clears up now, and we look for opportunities to get in to trading opportunities a lot more comfortably than we did yesterday. All right, so that's where we are. Fed, good job. Got to take your hat off to Jerome and the crew for not getting overwhelmed. If anything, the US Treasury yields are slightly lower. Equity markets obviously love any talk of lower interest rates, so they're up. What we aren't seeing at the moment is the flow through into the currencies, right? Ideally, what we'd like to see for a risk on profile, Euro, Sterling, Aussie, Kiwi up and the dollar down, but we're not seeing that at the moment. So just give it a little bit of time, right? It's only a couple of hours after the Fed. There'll be some repositioning by fund managers, investors, etc. And you'll start to see the real move following this. And I tell you what, this is a good time to start to come in and start focusing on the next major fundamentals, especially out of the US, right? Because now we've got the bench line, right? Or the benchmark. So that's where we sort of go from here. We've got some good stuff coming out today. Aussie or Kiwi GDP numbers, Aussie employment numbers, and then you've got UK employment. All we want is, so to me, the dollar is now neutral, if not a little bit bearish, just on the current fundamentals. And then we'll have a look at once we get into the US session, the sort of weekly jobless claims. I mean, it's a little bit annoying because this number is such an insignificant number that did get some life as we went forward. But the Philly Fed business index, these sorts of things are the ones that are the building blocks for the behind the scenes economic activity. So if we start to see a shift here or a consistent shift in the US numbers, that's going to deliver cash to us because that's where the trend will start going, and that's where we get involved. All right, guys, that's just a quick little tune up. Yeah, take it easy. I'll give you another update shortly.